A little bit now to that market picture and just see how things are faring, particularly in the Far East, where Asia stocks, excluding Japan, have looked to camp near their highest level since August. The Nikkei holds what is a 2.8% gain for the week. While the yen has eased as Sino-US trade talks slowly progress, the positivity has been consolidated, and that is despite the trade talks producing a lot of headlines, but no conclusions as yet. Now, while caution ahead of U.S. payrolls also comes through today, and of course there is a holiday in China, which dampened volatility. Asian markets were still upbeat for the week, despite a closed day out, particularly in China, as the Shanghai Composite there ended the day closed. The Nikkei almost added 0.4%, closing out the day 21,000, as you can see there, 24,110 points. The United States, the benchmark stocks there edging to a 6-month high, with losses in technology stocks countered by gains in Boeing and Facebook, as investors waited for more clarity on US-China trade talks. The Dow Jones Industrial Average rising 0.2% to 26,384 points, while the S&P 500 gained around 0.2% to close out the day at 2,879 points. The Nasdaq Composite only marginally down, 7,891. As you can tell, the market's performing a little bit better today, a little bit more green coming through to that market picture as well. Yes, some negativity across the board and some other counters, but locally we seem to be doing a little bit better than one would have hoped. Around 1/3% to the good for the JSE All Share, headed firmly towards that 58,000 point mark. And as you can see, the other indicators adding to that mix. It has been a good week for the financials as well, and that comes off the Rand, which has done so well following Moody's non-announcement on Saturday, which obviously happened later on in the week, however. Let's continue to unpack these numbers. I'm headed over to Warwick Lucas to get a more clearer picture of how things have fared. As you can see there, perhaps a mixed picture across the board when one takes a look at how things are faring, particularly in the United States there, as you saw as well. A bit of green coming through on that front too there. JSE All Share around 1/3% to the good as well. Let's chat to Warwick Lucas then from Galileo Capital as we unpack this market picture. Warwick, thank you so much for the time then. It has been perhaps a much better week, particularly for the JSE All Share, now 1/3% to the good, even heading towards 58,000 points, seeming a little bit rosy this week.
Yeah, I guess a little bit more certainty coming into our lives. I mean, Moody's non-announcement, it did add a certain amount of certainty in that the can has probably been kicked down the road, and we have a bit more clarity on what Moody's is looking to see in terms of developments here. We have apparent progress in the Sino-US negotiations, as you alluded to, and obviously not complete there, but 9 rounds of talk later, the sort of fairly positive puffs of steam coming out there, which is great for us being a commodity economy. I mean, China is the big dog that wags the commodity tail, so that's good stuff for us. And I guess, well, Brexit's still messy, but I suppose it's in the last straight of the cattle crush.
Is it really? Because that's the question now, right? We get to a point where we've continued to have countless votes, that is, and we keep pushing and kicking the can down the road, but we get nowhere.
Yeah, certainly. I mean, there's obviously a concern there that Theresa May, forced by her parliament to go and negotiate back with the EU, and promptly does with the EU what she tried to do with her very stillborn deal, which went to be voted on 3 times and get nowhere. And she's basically come back in a significantly weakened position, asking for the same thing she did 3 weeks ago for the 30th of June. And of course, that's a non-starter. But each day, I think things get forced closer to some kind of resolution.
I'm hoping that we can get the markets up as well just behind us. But most critically today with regards to equity news, the likes of Steinhoff coming out with news that they're going to again delay the financial statements of the company. Things continuing to not look as rosy, as pretty as perhaps one would hope that they begin to fix things. Do they get on the road to recovery anytime soon, that Steinhoff?
Okay, so I think the general expectation among Steinhoff investors right now is that they're sitting on a kind of a mushroom farm. It's smelly. There's no question about that, and it's really a case of, well, what's going to be left after a humongous legal fight and punch-up and so on many fronts. So I think no surprises there that what were already complex transactions that created some fraudulent assets, which is really what was reported in accounts there, and have to be revalued and reassessed as to, well, what kind of asset do they actually have there? Is it 10% recoverable, 5% recoverable, or just a total liability? And it seems like getting some basis to fairly value those so-called assets is quite an exercise. And
it doesn't get any better, right? So it's going to be a long-term thing. And do you think investors will ever be able to then trust them? Even if they get to a point where they can recover, they can fix things along, as you said, put out those financial statements as well eventually, do they get to a point where the markets begin to trust them again?
I think the reality is we're dealing with a group here whose financials and legal statements are so tainted that eventually there has to be some kind of sensible but controlled wrapping up. But I think that is a long, long way in the future. I mean, the kind of litigation that we're looking at here could very well take 5 or 6 years.
Sure.
Easily.
That long?
Easily. Yeah.
Jeepers. So how do they survive in the meantime? I mean, it's not as if they're generating all the money in the world at this point in time, right?
In the meantime, make sure that your actual profit centers that are working have enough working capital to just keep on rolling over. And I think that's why the the CVA agreements with the sorted interested parties are so important, in that they don't concede anything, but they allow things to just keep rolling over so that the businesses that are working continue to work and don't get starved of the capital they need.
Yeah. Okay. Well, on the local front, there is South African currency as well. The rand around 14 rand 9 cents against the US dollar. Perhaps a better sentiment there coming through. This week has been good for the rand. I think nearly 3% to the good almost at some stage for the week, that is. Can we get a sense of stability on that, or is the May 8th situation with regards to elections and the like going to perhaps stifle that a little bit more?
I think, look, a sense of rebound that just steadily came through on the week following Moody's there, and I think on the counter side, a little bit of weakness coming through in the dollar as well. I mean, and generally when we're looking at an environment where the US doesn't seem likely to hike rates, if anything, more towards a kind of a softer, more dovish footing there, is not going to lead to a stronger dollar. So between the two, I think a positive week for the rand-dollar rate.
Yeah. Very quickly, worried about Brent crude? It's headed to $70 a barrel. Even touched that mark a little bit early on as well this week.
Double-edged sword. You know what? Brent crude that's going steadily firmer speaks to a global economy that's in good shape. What we don't want to see are supply interruptions or sudden spikes. That would be very disruptive.
Yeah. Okay. Well, Warwick, appreciate your time this Friday. Have a wonderful afternoon, and of course enjoy the rest of your weekend too. And that includes you as well. More business news is coming up right after the short break, but